Hi guys, my name is Pat. Today is Thursday and let's continue our daily analysis of the market and let's plan our swing trades together. Okay, now currently we are looking at the USD dollar index in 4-hour time frame, and we have 10 candles closed above the 89 period, the moving average. Based on my system, it means that uptrend has officially started, but ideally I want like a strong break like this. But unfortunately, it's not that strong. It's barely 10 candles closed above the moving average, but that's not unusual. But in ideal case, I want like a strong break like that, so that it will continue to go up. But that's okay. We have to be consistent with our rules. Okay, so now now we are assuming that the market will continue to go up, meaning that the dollar will strengthen. Meaning that dollar will strengthen against the other pairs overall. Okay, now let's continue to fill our sheet. So we have USD index's trend is up. So what does it mean, guys? Look for opportunities to sell, to buy dollar, right? To buy dollar, and we will look for those opportunities from this other pairs. Okay, now let me remove that drawing. Okay, now let's take a look at the USD Japan yen and always, and here also we have 10 candles that nicely closed above the moving average, the meaning that uptrend has started in USD Japan yen, and we have the nice oh sorry, let me bring my Fibonacci back. So we got a nice leg from bottom to up here, and the length of this up leg is ideal. It's not too big, it's not too small, and it's a very likely to be a directional up leg in the upward direction. Okay, now let's draw our Fibonacci from minimum to max, and again my trading system is that I identify a trend and then I will look for an elegant entry into that trend. So here currently it's going up, and I want US to Japan yen at least retrace to 143 and 142.5 like this. Then I will start. Then in between that yellow box, I will place my buy limit orders here. But at least I wanted to retrace until 143, and so that my risk and reward ratio will be around at least 1 to 2. So here now USD Japan yen trend is up, leg is nice, and look, wait at least 0.61 retracement, right? So overall, again, the dollar is strengthening overall, and it's likely that dollar will continue to strengthen against Japan yen. Here is the first up leg. I wanted to retrace at least in this retracement zone between 143. Then I will start buying USD Japan yen. Okay, so that's the trade I'm looking for today and the next week, and let's see how it continues. Again, tomorrow we have at the 8:30 p.m. 8:30 a.m. Eastern time, we have our non-farm payroll news is coming. That's a huge news, and it will be interesting to see how market will respond to it. My intuition is that it will retrace in this area and usually those big news incur the market movement, then it will return to original trend, and let's see how it goes. And also ideally I want to see on the dollar index, I want like a strong behavior like this. But who knows, we'll see. Okay, now continuing, and let's take a look at the USD Canada dollar, and overall trend has been up. Here in this area, we don't have 10 candles. We don't have 10 candles closing above the moving average. So technically, it is still considered the trend is down. It's just the market is faking out. So that's what we're gonna put it here. USD trend is down. Leg is so here original directional leg in the downward trend is this one. It is, you see, considered to other directional legs, it is still too big, right? So my assumption is that if if the market is really faking out, it will behave like this. It will behave like this. So that's what I'm expecting from USD Canada dollar if the market is really faking out. So right now we don't have 10 candles closing above the moving average. That means market is faking out. Trend is technically still considered down. Okay, so now we're gonna put it down. It is faking out. The last directional leg has like a size of too big. So overall, it's the conflicts. It's conflicting with the overall USD index trend, right? Here, USD Canada dollar means USD is weakening. On the overall USD index says dollar is strengthening. So it's a conflicting information, right? In this case, we're not going to trade because we are not competent in the strength of the USD against the Canada dollar. So I'll just put the conflicting, and we're not going to trade USD Canada dollar. Okay, now take a look at the USD Schweizer franc. USD Schweizer franc. Again, you see, we see no candles closing up above the moving average. That means the trend is still down, and the last directional wave size is too big. You know, the market is behaving like this: here. Okay, you see the last directional length is too big compared to the previous legs. So it's unreasonable to expect this too big leg to demonstrate Fibonacci 1.61 extension. So what I'm expecting is that market will continue to retrace, then at some point it will return to original trend like this. So when market returns to original downtrend in this case, then I will start trading USD Schweizer franc. If it matches with the overall story of the USD index. So here we have USD Schweizer franc trend is down. It's just a down, right? Down. Overall, the last directional leg size is too big, and it's conflicting. It's conflicting with the overall USD index story. So I will just put conflicting. Okay, so I'm not going to trade USD Schweizer franc for the next few days. Okay, now let's take a look at the pound USD. Okay, that's interesting, guys. You see, like we have 10 candles. We have 10 candles closing below the moving average. So it looks like downtrend has started, right? But take a look at this, guys. Here, market closed more than 10 candles below here, then like it didn't continue down like the snow. It eventually went up, you see, went closed 10 candles above here, returning back, but it didn't really go up like that. Then it's starting to closing 10 candles below the moving average. You see, like pound USD is moving up and down along the moving average. That means the market is performing the sideways. There's no trend as for now. So here, pound USD, we're gonna put there's no trend. Market is performing the sideways, right? Trend is a friend. So for the pound USD, if there's no trend, there's no point trading. So I'm just gonna put nothing. We're not gonna trade pound USD. Okay, let me clear the drawing. Now let's take a look at Euro USD. Okay, nice. So for Euro USD, we see at least the 10 candles closing below a moving average. It looks like the trend has reversed, but again, ideally I want to see like a strong breakthrough of the 10 candles, like this to be really confident about the trend reversal. But here it's a little bit weak, but that's fine. It can happen. So we just have to be consistent with our implementation. So okay, so now we have the first down directional leg. Leg size is nice. You see, overall it's just the ideal leg size. You see when it goes up and down, this directional leg size it's not too big, it's not too small. It's ideal leg size to perform Fibonacci extension. Okay. Now we have now we know the trend of the Euro USD, and I just needed to retrace into good zone, then start selling Euro USD. It's meaning that the meaning of the selling Euro USD is equal to I'm betting on the fact that dollar is strengthening against the euro, right? That story matches with our dollar index behavior here. Our dollar index the USDX chart, it's strengthening. So we are eventually betting that dollar is strengthening. Okay. Okay. Now here I need the market to retrace at least 1.09 between 1.10, like a 50% retracement is the average retracement. Sometimes it could reach 0.38, whatever, but at the minimum profitable good zone is Fibonacci level 0.61, meaning that 40% the retracement. So I need Euro USD to retrace at least until 1.099, then I will start selling the Euro USD. Okay. Here. Okay. Now your Euro USD trend is considered the down. Last directional leg size was nice. So wait at least to sell. So that's my trading plan for the tomorrow and next few days, and let's see how market will unfold. Okay, now let's take a look at the Austral dollar USD, or we can just call Aussie, but I don't play the word games, guys. Okay, let's see how many candles have been closed below the moving average. You see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, it is still considered for a trend reversal, but again, ideally, I would like to have like a little bit of stronger reversal, like this. I want the 10 candles to demonstrate the strong opposite movements to confirm a trend. But but it's not the case, but that's okay. It is still a valid reversal. Okay, but again, I don't know how the market will respond at tomorrow non-farm payment or roll news, but it will be interesting to see. Okay, for Australian dollar, for Aussie, trend is down, and again we need the retracement at least into 1.61, and I needed to retrace at least 1.668, then I will start selling Aussies. Okay, the same story here. The trend is down. Nice, leg was nice. Wait at least to sell. Okay. So again, for the dollar index, I want to put. I said like at least I want like an ideal strong breakthrough over the moving average, right? Not the ideal. So I'll just put not the ideal break, not the ideal break. Not the ideal strong break. I would just put it, but that's okay. It is still worth the opportunity to trade. Either I'm gonna lose or either I'm gonna win. It doesn't matter. But I have seen the many cases. It starts to break small like this, behave a little bit stronger, then starts to jump up like this. It is totally possible. So, but at least like a 10 candles closing up and above or below the moving average, it is a still strong indicator of the trend reversal. If the market is really faking out, they usually come back to original trend within the 10 candles. Okay. Okay, now let's see. Last pair I'm gonna analyze is a New Zealand dollar USD. Okay, let's see how many candles are closer below the moving average. 1, 2, 3, 4. This one is better, but we can still count 5, 6, 7, 8, 9, 10. Okay, still 10, but you see again, it is a not still strong breakthrough. I want an ideal breakthrough like this. Then I wanted to let it to retrace, then trade. Okay, but that's okay. So I'm expecting the market to hang around here a little bit, then retrace into profitable zone, and here in this area I'm gonna buy, then let it go through into Fibonacci extension. Okay, let's see how it will work out. So trend is down. Leg size is last directional size is nice. You see, it's not too big. It's from here to here. The leg size is not too big. It's not too big, and also not too small. If this leg size was a small, it could still be the part of the retracement of the previous up movement. So it's an ideal size, just scanning through the eyeball. So down. So down, nice. Wait at least 0.61. 0.61 to retrace. Then I'm gonna start selling New Zealand dollar USD. The meaning that dollar will strengthen against New Zealand dollar. Okay. Okay, so that's my plan for tomorrow and next few days, and I really want to look forward to how it's going. So looking at this, what is the overall picture? What is the overall structure? So dollar market is very likely to have reverse the trend, the meaning that dollar will start strengthening against the other pairs, but it is still not the ideal strong break. But that makes sense, right? Tomorrow is a big news day, and probably everyone is anticipating how the market will perform, and probably they're just holding their breath. So that makes sense. So at this point, the biggest, the most, the best decision is to wait, and I want to see how the market responds to tomorrow's employment, the news, and if the dollar index still demonstrates the ideal strong break, then we can be sure on the fact that trend has reversed and dollar index is going up. Then we can trade all these pairs, and we wanted to retrace into at least a 0.61 Fibonacci retracement, then start trading with a good risk and reward ratio. Okay, so that's my analysis today as of Thursday 2024 January 4th. Okay, thank you for watching it, guys. See you guys soon.